Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today we're reviewing the first quarter results of Angostura Holdings Limited and Unilever Caribbean Limited, both for their first quarters ended March 2018. Both companies, while in the manufacturing one sector, would have had differing fortunes over the period. Let's take a look first at Angostura Holdings Limited, or AHL. And for the period, the company reported earnings per share of just around 14 cents, which is a commendable 75% increase from the 8 cents reported in the prior comparable quarter of 2017. Green lights across the board as revenue increased 15.5%, and the company actually recorded a significant decline in cost of sales by about 10%, which led to an overall increase in gross profits from $70 to around $92 million, or a 30.8% increase. Profit after taxes overall increased just around 76%, from $16.1 million to just around $28.4 million for the quarter. Now, it's good news for Angostura in terms of trends for its first quarter performances historically. And as we can see, revenues for the first quarter at around just a shade under $130 million is at almost its 5-year highs, which is pretty close in line to the first quarter of 2014, which was just around $131 million. And importantly, an upward trend since the first quarter of 2016, moving in quite a positive direction. As you can see, branded trade, which is in the blue part of the column, now accounts for just around 95% of total revenue, while the commodity trade revenues have been declining significantly, or from $18.5 million in the first quarter of 2016, and now accounts for just around $6.5 million of total revenue. Cost management has been key to Angostura's success, and as we can see, its gross profit and profit before tax margins have been improving. If we take a look at the gross profit margins in the bright green, we can see that from the first quarter of 2015, continuing on to its most recent first quarter of 2018, there has been significant improvement from just around 51% in the first quarter of 2015, on the left of your screen, to just around 71%, meaning that the company has been able to translate more of its sales into pre-tax profits and pre-tax gross profit margins. A similar trend has been noted with profit before tax margins, where while hovering at around 17 or 18% for 2016 and 2017, profit before tax margins have actually improved significantly to around 32% in the most recent quarter. So, good news for Angostura in terms of its operating efficiency. At its current trading price of around $15.75, the company is trading at a price-earnings multiple of around 26.3 times, below the sector average here in orange of just around 18 times. And it offers investors a dividend yield of just around 1.3%, some way below the 4.4% on average, which is offered by the rest of the sector. So on the basis of improving financial performance, but tempered by somewhat elevated valuations, Bourse maintains its neutral rating on Angostura. Turning quickly to Unilever Caribbean Limited, and for the first quarter ended 2018, the company reported 12 cents earnings per share, a 20% decline from the 15 cents reported in the prior comparable period. Not such good news as compared to Angostura. Revenues actually fell just around 12.4% for Unilever for the period, and gross profits also declined around 14.2% from $40 to $34 million. Overall profits after taxes were $3.1 million compared to the $3.8 million reported in the prior comparable period. And again, in contrast to Angostura, what we note is that while Angostura would have had improving margins, UCL has had somewhat more of a challenge with lower domestic demand, of course, weighing on its gross profit margins, which have now stabilized around the 34% region after being as high as 41% back in 2015. Profit before tax margins are also on the lower end, from a high of the first quarter 2016 of around 9.5% to now its current, most recently reported quarter of just around 1.3%, meaning that the company is confronting some headwinds to managing its costs. Hopefully that should turn around in the near future, as some efficiency and operating cost initiatives are being undertaken by the firm. So at the current trading price of $32.50, Unilever is trading at a price-earnings multiple of just around 89 times, which is well above the sector average of 18.2 times, and also offers investors a dividend yield of 2.3%, again below the sector average of 4.4%. So with some headwinds to financial performance and elevated valuations, Bourse maintains its sell rating on Unilever Caribbean Limited. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.